While many can argue that it's always a great time to gift, it's often a matter of timing that should be taken into consideration. A question I hear all the time is, will I have to pay tax on money or assets that I'm gifting or gifted? And the good news is, there's usually ways to work around that if handled correctly. In today's episode of Nestology TV, I'm going to talk about things to consider when gifting. Let's get started. Before we talk about the timing of a gift, let's talk a little bit about the limits as they stand currently. The recent Tax Cuts and Jobs Act raised the lifetime exclusion limits for estate and gift taxes from roughly $5.5 million to over $11 million. Now that's an amount that most people will not be affected by. Also, the annual gift tax exemption was raised from $15,000 for an individual to $30,000 per couple. If the gift exceeds the annual exemption, the amount is applied against the donor's lifetime gift limit. Essentially, the amount applied to the lifetime limit will affect the calculation of the donor's estate tax. Now I'm going to talk about some of the perks of giving while you're alive. One of the nice things about giving while you're alive is you can assist your heirs and actually see the fruits of your labor take their course and benefit them. You could also potentially lower or avoid any future estate taxes. One of the things you can also do is to help avoid creditor risk by shifting assets to family members that have lower credit risk. You can also shift the tax load to family members in lesser tax brackets. And you can also take advantage of specific valuation discounts when relocating to another family, owned business and farms, for example. You could also potentially minimize estate taxes in states where lifetime gifts are not taxed. Those are just a few of them. Now let's talk about things to consider when waiting upon death to transfer assets. You have the ability to preserve, control, and utilize assets while you're alive. You can also preserve the step-up in cost basis of assets upon death. For lifetime gifts, recipients inherit the original cost basis of the assets. Heirs receiving gifts upon death assume the date of death cost basis. That could be a great tax savings. Gifts during your lifetime could also depreciate in value, so that's worth considering. And then lastly, future policy changes could impact gifts. For example, if current gift tax exclusion is repealed, then it could be inappropriate to gift now. To fully comprehend how estate tax and gift tax rules can affect your personal financial plan, it's imperative you speak with a certified financial planner. Those who are considering advanced planning strategies around estates and gifting should work with a qualified wealth nest advisor who has knowledge of their financial situation and goals. Thanks for joining us for another episode of Nestology TV. Until next time, take care.